Hi, today is September 24th, 2022. I'm Jason Shapiro with CrowdedMarketReport.com. I thought today I was going to get into something that's very current, which is how to pick market turns, and possibly more importantly, how to not pick market turns. So picking market turns is obviously something someone who considers himself trying to make contrarian trades tries to do, and we all like to do it because the market turn is a great inflection point. It offers great risk reward if you can do it successfully over time, and for that reason it's very, very difficult to do, and we have certainly three obvious situations going on right now that it seems everybody's trying to figure out where the turn is, which is the stock market, which is going straight down and everybody wants to figure out where the bottom is. The dollar, which is going straight up and everybody wants to figure out where the top is, and the bond market, which is going straight down and everybody would like to figure out where the bottom is. So I think this week offered a great example of how not to pick a market turn and how it can get you run over if you are not patient. And the key to this whole thing is going to be patience, which I'll get into. And just as an aside, this makes me think of something, people sometimes ask me, well, why do I do these videos and all that? And I like to think part of it is because I'm trying to help people learn, and that's the non-selfish part of it. But there's also a selfish part to this, which is by doing these videos and expressing these things and verbalizing these things, it actually helps me very much with my discipline. I can sit here and be like, oh, I want to do this stupid idea. Well, I just talked about how that shouldn't be done. So it helps me to not do stupid things, which is good for me. So let's take a look at some of these things. Let's take a look at the dollar. Okay, so here is the dollar index, right? And I mean, clearly the freaking thing's gone parabolic. Okay, and so how are you going to find the turn here? Let's start with how not to do it. And the way to not do it is say to yourself, well, this thing's gone parabolic and it's gone up way too much and it's overvalued and it's overbought, and it's time to sell it. That's going to get you run over. And this is the proof. If you had been trying to do this, you'd be getting run over. So I go back to the idea of market turns are seen. One, it's not a price thing, because as they say, market price can be irrational longer than you could stay solvent. It's, to me, a participation thing. Too many people are long, so now it's time to look to go short from a risk reward perspective. But even that really is not enough. What you really need to do is look for some form of market confirmation, right? And to me, I've spoken about this before, but it's very important. Market confirmation is all about, let's take the dollar. Why is the dollar going up, right? And therefore, when more of that happens and the dollar no longer goes up, that's the time to start thinking about picking the turn. And we clearly have not had that yet. What's theoretically driving the dollar going up here? There's a bunch of arguments, but certainly risk off around the world has been forcing money into the US dollar. Certainly higher interest rates in the US relative to other places have been forcing people into the US dollar. So we want to look for those things to continue. Risk off, massive risk off trade, and yet the dollar doesn't go up anymore. Huge move down in bonds, US rates going up relative to other countries, dollar doesn't go up anymore. That's when I'd be thinking about trying to pick the turn. And the COT data, which you can see here, and I think you can see it more clearly here. Let's get the dollar index up just to make it a little bit better. So here's the dollar index. So this has been sort of a speculator long positioning, right? And sure, they're long, but they're not excessively long. And if you look what happened over this last week, this was going into Tuesday. This data came out on Tuesday. the dollar ripped on Wednesday, Thursday, Friday. But you saw going into Tuesday, speculators were getting out of these dollar longs. So in other words, they were trying to pick the top because of all these bad reasons, right? It had gone up too much and all that. And they got nailed, right? And I'm guessing since then, I'm guessing that they probably had to buy these things back, and maybe we'll start getting more crowded next week. I don't know, but they shouldn't have been doing it yet. It wasn't max crowded anyway. We never saw any kind of market confirmation, and they got their asses handed to them. And we have the same situation in bonds, okay? So bonds been going down, 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 down. And this is an interesting one because, let me pull this up first, but it was the same situation in fixed income this week, where you actually did have speculators getting quite short, but going into Tuesday, they were reducing their short because they're trying to pick the bottom in bonds. And that also didn't work. This isn't just bonds, this is all fixed income, right? And that clearly didn't work if we look at the individual fixed income markets. I mean, this is the short end. Look at how many of the shorts they got out of going into Tuesday, right? Same thing in like the 10-year notes. Look at how much of the shorts they've gotten out of in the last 3 weeks. This is a speculator short position. They're trying to pick the bottom and they're failing, and so it's running in their face and they're getting run over. This was an interesting one because really, if there's one thing that I heard 100 times this week on TV from all the commentators, is that bonds offer value here. I heard it every day, people buying bonds. One woman on one of the shows, who's an equity person, said she bought short end, and it's all short end that they want to buy. She bought short end fixed income for the first time in her career, right? So the woman's been managing equity portfolios for 30 years or something. For me, if all these people are on there every day saying that they're buying fixed income here, and our friend Jim Cramer also, I think it was about last week, some point, was saying he was buying the 2-year notes because of the value. He's getting his guaranteed 4% and all that. If they're all on there buying it and saying this is the thing to buy, then that's not going to be the bottom, okay? You're just not going to have everyone on TV get on there and pick the bottom. Picking bottoms are very hard. And I think the thing to keep in mind is the bottom happens once, right? There's only one time it's the bottom. So therefore, you have to be patient, very patient, because it only happens once, right? Don't get run over. Be patient. And we can get into the same thing on the stocks, right? Equities. You don't see speculators massively short Dow here, right? You did back here in June when we had a good bottom, but then they got out of those shorts and then the market went right back down. You don't see them massively short in NASDAQ, right? Russell, arguably they're short, but not massively so. And S&P, same. Coming into Tuesday, these people were buying the S&P, and look what's happened since Tuesday. The thing has gotten just destroyed, right, in 3 days. One of the worst 3-day periods that, of the year, right? Look at this, man. I mean, this was Tuesday, and this thing just went straight down because these people are trying to pick the bottom based on it's oversold and et cetera, and therefore they're getting run over because they're buying it. It's going down. They all got to get out. You have to wait until they are not trying to buy it, when nobody wants to buy it anymore, and it shows up that everybody's now massively short, and then the market fails to go down on bad news. That's when you want to start, that's when the risk reward is to start buying the bottom. So that's really what I wanted to say. Picking market bottoms or market tops, it happens one time. So you have to be extremely, extremely picky about doing it, right? You want it lined up perfectly, right? And if it's not lined up perfectly, then let it go. And it doesn't mean, this is the dangerous part, right? First of all, there's a few dangerous parts. The one is like, okay, so the stock market's going down. I'm not short. I go through this in my mind, and I think everyone does. I'm not short. Therefore, I want to find them. I want to get long and catch the move back the other way. That's very dangerous, okay? So if that's how you feel, take a breath, step back and wait. be patient, right? Wait for this market confirmation. Wait for everybody to have given up totally on shorts. And are we there right now in stocks? That's a whole nother discussion. But you know, first of all, the COT probably saw some massive selling in the last 3 days, so we might be there in the COT now. Second of all, we're starting to see some classic signs of the sentiment numbers getting, you know, really bad, and the put-call ratios are starting to sort of explode. So we could be getting there, but you still have to wait for this market confirmation. Figure out what is the psychology behind why the stock market is going down, right? And wait for more of that news to come out, and then let the market reverse. Let the market tell you when to do this, not you tell you when to do this, because that gets into that whole dangerous psychology of, I just want to be long because I'm not short, and that'll just run you over. That's where contrarians get run over. So this is what you have to avoid. You have to avoid these bad trades. So that's really my idea for today. I hope you enjoy. Any questions or comments, always happy to hear them. And good luck with all this. These markets are pretty crazy right now. So good luck with the discipline. All right, thanks.